Well, I'm about to read a letter here. I posted a link to it, but I think that a lot of people need the actual meat of it, I guess. We live in a audio-visual world, not a reading. This is a letter that's posted, and you can look this up. I will post a link to it in the more info section of the SEC's website. And basically, this is a letter. I'm just going to read it to you. I think you'll get the gist. But I found it rather shocking, and I'm surprised that more people haven't listened to it. So here goes. Thomas Villarino and Nancy M. Morris, Secretary, Securities and Exchange Commission. Date is October 31st, 2007. Release number 3456213, file number S71907. Ladies and gentlemen, the naked silver scandal involving Morgan Stanley is indicative of the issue at hand with naked short selling of securities. Reg show and the elimination of the market maker exemption, the silver fraud, which is an analogy to the securities fraud by Wall Street firms against investors, involves crediting non-existent silver to investors' accounts. Here it was found in court that Morgan Stanley gave false balances for silver to investor accounts and even charged for silver storage. For silver, Morgan Stanley never had and had never even bothered to buy in the first place. Thus points to the credibility and willingness of these large firms to defraud their own clients and the markets. So I ask that the SEC take this into consideration when reading and speaking with representatives of these firms. I'm going to pull from skip down to the important parts. A reader who had held silver in 1,000-ounce bars requested Morgan Stanley provide him with the serial numbers and weights of his bars, on which he had paid storage and insurance fees for many years. He was given the runaround and not the serial numbers and weights. I am aware of this through email exchanges with him. I told him that the only plausible reason they wouldn't give him the information was because the bars did not exist. He contacted a lawyer, and that ultimately resulted in the class action settlement after years of legal wrangling. By not actually buying and storing the real metal to back the customer's purchase, financial firms can greatly enhance their bottom line profits through the free use of customers' funds. Morgan Stanley's actions were not in any way unique in this practice. In fact, in the court documents summarizing the proposed settlement, one of Morgan Stanley's defenses was that they were not doing anything unusual by charging storage on metal that did not exist, as this is a widespread industry practice. On a purely financial basis, the institution is given cash by the client and does not have to return it until the client sells his silver, which may not be for years or decades. For the entire time the client does not sell, the firm has full use of his money on a zero-cost funds basis. Those firms who charged, and still charge, storage and insurance fees for the non-existent silver rake in even more from the client. Honest dealings aside, this is a very cash flow positive business for these institutions, even if silver doubles or triples in price. There is no margin call to the selling institution, as clients don't issue margin calls, as long as clients don't sell on a net basis. The issuing institution still doesn't experience negative cash flow. In our short-term world, that is all that matters. If you or I arrange to do what hundreds of world financial institutions have done, we would quickly be put in jail, as it is fraud, pure and simple. So, what do you take from that? I looked into it a little further, and what I found was that there was, in fact, this letter that had gone back and forth, and the one individual is requesting something be done about this problem so it doesn't happen in the future. And apparently there was something that went through, and I did find another article, and I will also post a link to it. Someone can clarify the rigmarole in there for me, that'd be great. But to me, it seemed like it took effect on October 17th of 2008. The day prior to that, silver fell almost $2 an ounce. It went down in price. So to me, something seems extremely off. And what I think this means for investing in silver is, I think that the price is not going to go straight up until the mining, the pulling it out of the ground stops. As long as they can back the price with paper, they can push it down whenever they want. It will, however they want. So it doesn't mean I'm not going to buy silver. It just means I'm not going to sell silver. That's what it means. I'm going to buy it and hold it and wait.